From 11FS, this is Fintech Insider News, and I'm your host, Ross Gallagher. We finished up the final news show recording of 2022, and we really do have a great show for you. We're bringing you the big stories, including FTX founder Sam Bankman-Fried, charged with defrauding investors. It's pretty bad. Nubank announces $330 million equity capitalization in Mexico, really one of FinTech's global success stories. And who's on FinTech's naughty or nice list? You don't want to miss this one. Lots of really good shouts. We get into all this and much more, but first a few brief messages, so don't go anywhere.
Embedded banking and banking-as-a-service business models open up a world of opportunities for banks, but they also present plenty of challenges along the way. In our latest report, in partnership with Infosys Finacle, we unpack the growth and revenue opportunities for banks, take a look at the brands that are already making headway by embedding banking into the context of customer journeys, and address the challenges that banks and brands need to overcome to deliver embedded banking successfully. Find out more and download your copy at content.11fs.com. Hello and welcome,
LFG people,
to Fintech Insider,
Blockchain Insider, 11FS Spotlight,
11FS Explores,
Open Mic Night,
After Dark.
Through our podcasts, videos, newsletters, and live events, we have a direct line to a truly global fintech community. So if you're looking to sponsor and collaborate on content that connects with everybody from fintech beginners to the biggest VCs, then chat to our team at sponsors@11fs.com or visit 11fs.com to find out more.
Long live the community.
Hello and welcome to episode 690 of Fintech Insider. I'm Ross Gallagher and I'm joined this week on our last Fintech Insider news of the year by some great guests to break down the week's biggest stories in fintech and financial services. Firstly, making a welcome return to Fintech Insider, we have Janay, Director of Financial Policy from the Chamber of Progress. Hi Janay, great to have you. Tell me, since we're feeling festive, what are you hoping for in your Christmas stocking from Santa this year?
Well, good morning. I would say the biggest thing I'm hoping for is a new SEC chair after the collapse of FTX.
Yeah, it's bold and ambitious, but I like it. All right, well, look, Janay, really great to have you. Thanks for joining us. It's also a very exciting and very welcome return to Fintech Insider for Sarah Kocianski, independent fintech consultant. So Sarah, look, welcome back. Amazing to have you. I like this question. What does someone buy an independent fintech consultant for Christmas?
Can I just be paid on time, please? Like within the 30 days it says in my invoice? That would be really, really nice. That's all I want.
Also bold and ambitious. I love it. We're keeping the theme. Yeah, Sarah, lovely to have you. Thanks for joining. And then we also have a very welcome return to Fintech Insider for Bruno, Diniz, co-founder at Spiralem. So Bruno, look, welcome back. Great to have you. Your question: what does a Brazilian Christmas look like?
Yeah, first of all, glad to be back and basically hot. That's a good one.
I'll bet.
Yeah, like 30 degrees Celsius plus. So that's basically Christmas in Brazil. Pretty different from everything that I see you guys.
Yeah.
Like all dressed up and cold weather, but that's basically, and it's a slow-paced month as well. I think December, from the mid-December onwards, I think it's a very, very slow month.
Yeah, I think given that Sarah and I are both sat here freezing, I think the idea of a hot Christmas sounds pretty dreamy right now. All right, well, look, great to have you guys with us. I think we're going to have a good show. And so I guess with that, let's dive in. So our first story comes from The Guardian with the headline, FTX founder Sam Bankman-Fried charged with defrauding investors. So Sam Bankman-Fried, SBF, the founder and former chief executive of the crypto exchange FTX, has been charged by the US Securities and Exchange Commission with defrauding investors in the company. The SEC said Bankman-Fried concealed his diversion of FTX customers' funds to Alameda Research, FTX's crypto hedge fund, while raising more than $1.8 billion, or £1.5 billion for UK listeners, from investors, including about $1.1 billion from about 90 US-based investors. With the significant amount raised from US-based investors, The agency is asserting its right to oversee the case, despite the FTX itself being nominally based in the Bahamas. FTX filed for US bankruptcy protection last month, and Bankman-Fried resigned as chief executive, triggering a wave of public demands for greater regulation of the cryptocurrency industry. In recent weeks, US authorities have sought information from investors and potential investors in FTX. Now, for the fully crypto-native take on this story, you really should tune into our sister podcast, Blockchain Insider. Today we'll attempt maybe to look at this story as it relates to the wider industry. Janay, I'm going to bring you in here first purely because you referenced this exact story in your intro, but keen to get your thoughts, your reaction to this story this week.
Well, it's very significant what's happened. It's already been a strained relationship between cryptocurrency and lawmakers. At a time when the industry really needs thoughtful regulation and clear rules of the road, lawmakers are now in a position where they need to be more reactive in their proposals as we head into 2023. So at a time when, crypto needed to regain consumer trust, SBF cemented a sketchy reputation with the actions of the collapse of his companies.
Yeah, no, absolutely. I mean, Sarah, that point on trust, I think, is a big one, right? And there's no escaping the fact that this has had a damaging impact on crypto more generally, right?
Yeah, I mean, I think it has to a certain extent, though I always question how much of an impact it's going to have on the people who are fully sold on it, right? Like, they will go, that's one bad actor. They will go, I'll find somewhere else to do it. I'll continue to invest in crypto. If that's what people want to do and if they fully believe in it, then I don't think this will have that much of an impact on the general retail investment landscape. The thing that really frustrates me, and this is me getting back on a soapbox that you've heard me pronounce from before, Ross, is that when are we going to stop trusting privileged, and excuse me, men who run these companies just because they happen to come from that background of privilege? I mean, yes, there was illegal action here, absolutely. But part of that illegal action came from the fact they were just making it up as they went along. And because they sounded confident, because they were well educated, a lot of it was just allowed to happen. Yes, regulation needs to happen. I completely agree with that perspective. But I think part of the reason they got as far as they did was because of who they were. And then to your point of trust, we need to stop trusting people based specifically on how they appear or what their demographic is, particularly in the wider tech space. That's not just fintech. Steps back off soapbox.
Oh, I've missed that. No, that was terrific. And listen, I mean, I completely agree. And one thing that I guess has sort of come up on this story and something that maybe might help contextualize it. Bruno, how much do you think that this is a sort of an issue specifically with crypto, or just really actually this is a story about fraud, and whether it's crypto, TradFi, actually, as long as there's value to sort of be extracted by taking advantage of people, bad actors will do that, to Sarah's point.
Yeah, first of all, I think that's not something related strictly to crypto. It's wider. We're talking about fraud. We're talking about, the type of crimes that happens all the time in the financial sector. But the thing is, it brings up to attention for us that the need for, a proper regulation and smart regulation. If you take an example, for example, the case of Japan, they've been through that 2 times with Mt. Gox. And there's the other company, the other crypto exchange, which is Kocianski. So basically what they did there is they segregate the money from the customers from the actual exchange, and they need to put that money into a third party. They got to deposit the crypto. They need to be custodian in another place. So things like that, I think, are fairly basic things around regulation could help a lot. Change, but I really think that's all the way that the case of SBF and FTX is being conducted right now. I agree with Sarah, is a total mess, and I think that so many lessons can come from this type of thing that happened in the market. So, but it's not crypto's fault, definitely.
I also wanted to add briefly, just piggybacking off of what Sarah had mentioned with privilege. Sam Bankman-Fried was a well-connected individual. His parents, had ties to Hillary Clinton, and his parents also had ties to Gary Gensler, and so he was able to leverage those contacts, to really advance his agenda and advocate for himself. And because of those relationships that these government officials had with his parents, he was really able to leverage that. So I like to refer to this as an outlier, because your average crypto innovator does not have, well-connected parents. They are people who are out here trying to innovate and do well in this space. So I don't think that SBF and his actions are indicative of the entire industry as a whole.
I think it's going to be interesting to see if he comes back from this. My brain's gone to Adam Newman. Now, arguably, he didn't necessarily conduct fraud of this scale, but the way he's come back, the way that money's just pouring into his latest venture, it frustrates me. There are so many amazing founders out there with amazing ideas who never even get to speak those out loud, let alone put them in front of the kind of investors that Bankman-Fried and Adam Newman can just step into. To Janay's point, into his parents' living room and just say, "I've got this idea." I think I would like to see proper action taken against him as if he were any other person committing this level of fraud, including, and this would apply to anybody in the the TradFi industry, restrictions on what he can do in future within this industry. Like, can you come back and operate in this? Not if you've got restrictions against you in any other part of finance.
Well, just one thing to add to that. I think it's a very interesting topic. It also makes me think about Theranos, the case of Elizabeth Holmes as well, because when you see what happened to Adam Newman and what happened to Elizabeth Holmes in this whole thing, it's not proportional. It's crazy, and the same thing applies to SBF in this case.
Yeah, it's an interesting one because, look, I think hindsight's a wonderful thing, and I think some of the things that have come out about this story, when you read about them now, they seem like such obvious red flags. Like, it almost feels unusual that this wasn't called out before, right? But I guess in the context of what we're talking about, we've mentioned a lot of people, right? Adam Newman, Elizabeth Holmes, obviously SBF. We seem to make the same mistakes over and over again with these sort of like celebrity CEOs not actually maybe doing enough to really interrogate like the business model, the product, whatever it is. I mean, Sarah, maybe back to you. Do you think that we're going to start to see any movement away from that sort of celebrity CEO, and those sort of like celebrity founder businesses in favor of just better fundamentals? Like, are we going to learn anything this time?
So I would like to say that I think we are going to see a change. However, from my perspective, I think there's a cultural and a societal issue at play here, which affects which people we question and which people we don't, when they're doing certain things and when they're acting in a certain way. And when certain people act with confidence, they get away with it. When other people act with confidence, more questions are asked. So I think, unfortunately, I don't think it's going to happen quickly.
Allow me to jump in here. I don't think that there will be the end of the celebrity CEO. We've seen CEOs who just started out in business and, technology, and now they've become celebrities off of, the company that they founded and that they've branded, just thinking about Elon Musk and Jeff Bezos and Mark Zuckerberg. So I don't think we'll see the end of the celebrity CEO, especially with more people interested in personal branding and that sort of thing. But I really think that, related to FTX, this was a more partially fueled by low interest rates and a huge amount of venture capital money just looking for anyone to come in and generate returns for their organization. So I think that, SBF being this wunderkind and, the crypto messiah at some points, it was just, partially propped up because people were very greedy, specifically venture capitalists. I think down the line, with higher interest rates coming around the bend, I think it'll just lead to more careful investors and investors who are really seriously looking under the hood to make sure that all of their investments are sound financially.
Yeah, which can only be a good thing, right, Bruno?
Yeah, the thing is, I also, when you think about the venture capital industry and all of that, most of the venture capitalists, they invest in people, in the founders. So there's a lot of I would say, pressure on that specifically. But I really wish that the celebrity CEO was over, especially after a point in which, the company already grow and now the company is public listed, and then, or even prior to that, because as an investor, I really don't like that. It's just like the case of politicians. If a politician is like displaying a lot, if we're talking a lot about that, if you know him more about how he's displayed in the media rather than, if you're not listening, they are doing a job, and perhaps it's better this way if not listening because they are working properly and you conduct your life. It's a different era, like Boris Johnson's and the Donald Trumps of life. You hear more of their personal life or everything that they think rather than the actual work they are performing. So I think it's pretty much the same when we're talking about companies, but it's far from over, just like Janay said, because now we are in the personal branding era as well. So, but let's see how it's going to unfold.
Yeah, well, look, I mean, as far as I'm concerned, I think if we do start to move away from, not necessarily move away, I mean, I take your points, but if that celebrity CEO becomes less of the focus, and Janay, to your point, we start to look a little bit closer at actually are those strong fundamentals in place. I mean, that's only good for everybody, right?
So I have one more consideration on that. I think we need to keep a distance of what is a celebrity CEO and what is a CEO that inspires. For example, in case of Brazil, we have Dave Vallis from Nubank. We don't hear that much about Dave Vallis. He's just doing his job, and he not brings and draws too much attention on what he's doing. It's different from what you see in the case of SBF, all the time in the media, all the time lobbying, all the time talking. And I think that deviates a little, the attention from what's actually important, which is the work of the company, how the company is performing. Case of Nubank, performing well. The CEO is not the flashy guy. He's a very low profile guy. But it's a guy that inspires the industry. So that's a different thing that I think it's important considering here.
I completely agree. And I think Nubank as just like a global fintech success story, I think they're as good as anyone. They also are our next story, so it's a very neat segue. So I'm going to move us on. This story comes from Reuters. So Brazil's Nubank announces $330 million equity capitalization in Mexico. Brazilian digital bank Nubank, Latin America's largest fintech, announced a $330 million equity capitalization in Mexico as it pushes to expand operations in the country. The investment adds to the $1 billion the company has previously invested in foreign investors and one of the best capitalized financial institutions in Mexico. So Nubank also said that Mexican banking regulator CNBV approved the expansion of its product portfolio, allowing the company to kick off the rollout of its digital savings account and debit card announced in November. So Bruno, I think it makes sense to come to you first on this, interested sort of in your sort of thoughts more generally, and then also, I suppose, why Mexico is such an attractive prospect for Nubank.
Okay, perfect. Yeah, I think that's the next obvious battlefield for Nubank. Nubank is already big in Brazil. Out of 70 million clients, more than 65 million are in Brazil. So they established their footprint in Brazil. They became the 5th largest bank in the country, which is a very big deal. And now they are aiming to play big in Mexico as well. When you look at the competitive landscape in Mexico, there are lots of space for Nubank to grow. They are 33.2 million customers based there. So they have a lot of space to grow. There are lots of unbanked people in Mexico as well. And right now, as the Nubank became a public listed company, big one in Brazil, is a time for them to do everything they can to challenge the Mexican financial space, where we still have the big banks as big players there. So there are many things to be challenged in the Mexican financial space by Nubank. I think they're in a good position to do so.
And Bruno, to your point, it sounds like lots of scope to bring sort of excluded people into sort of formal financial services, which was a big part of the success in the model in Brazil, right?
Exactly. And I think that the Nubank got the mechanics, even though in the case of financial exclusion in Mexico, is deeper than Brazil. I think Brazil got a better scenario in a general sense. But there are some similarities, especially the cultural ones from Brazil and Mexico, and that can obviously be used as a playbook for, as Nubank's are very well established here, start doing a very good job in Colombia as well. But Mexico, I think that's the time to go all in the country and really make a positive difference there.
Yeah, it's incredible because you rightly mentioned they're now sort of very well established in three markets and growing. Sarah, I started out calling them a sort of global fintech success story. I think Bruno sort of covered off the customer numbers, which are staggering the market, and they're profitable, right? I mean, this is a rare thing.
Yeah, I just when I saw this story come up, I went away to see if I could go, told you so. I wrote a blog post in February 2021 about Nubank, which was called "The Most Interesting Digital-Only Banks Don't Get Enough Attention," about how I predicted that Nubank was going to be like the shining star. So I just like to say, I told you so. It doesn't happen very often, but it's on the 11FS webpage if anyone wants to go and double check it. To your point, Nubank has done incredibly well. And to Bruno's point earlier, I think a lot of that is down to the founding team. They've got a very strong founding team who are actually very purpose-driven as well. They kind of have a mission as well as wanting to. A lot of bank founders, neobank founders, will say, "Oh, there's a gap in the market and we want to fill it." The gap in the UK market for a neobank was nothing like the gap in the market in Latin America. Most people who wanted a neobank or have got a neobank in Europe, and to a large extent the US, although it's slightly different there, have another bank, have another option, can go somewhere else. What Nubank did was go into a market that was incredibly dominated by some very powerful institutions and politically powerful. Bruno obviously knows a lot more about this than me, but from an outsider reading it, politically powerful, and say, we are going to challenge you. And they did that well through this purpose-driven, this mission-driven organization that genuinely put financial products into people's hands who needed them and didn't go around charging them exorbitant fees just because they could. That obviously worked incredibly well for them in terms of word of mouth. A lot of their customer acquisition has been organic. Okay, Monzo's customer acquisition was organic, but the way in which those products are used and what they mean to those people's financial lives is very, very different. So I think, yes, Nubank is an incredible success story, but I don't think it's right to match it to Chime or Monzo or Starling, because I think they're operating in very different markets with very different customer segments. That doesn't mean, as I said, Nubank haven't done well, and the way in which they're doing it is continuing to prove that they understand that their customers, they understand there will be nuances between the markets and what those look like, and it's working out well for them. But yeah, I think you just have to take it with the nuance of understanding that specific market. And I know that people like Wise are trying to go into Latin America. I don't think they'll have anywhere near the same level of success. Not least of all because Nubank's cleaned up, but but just in terms of understanding the customer, understanding the problem, and understanding the culture.
Yeah, it's a really interesting distinction to sort of delineate between the success that Nubank has had and then the likes of Chime and Monzo and others. Janay, do you think there are things that, you know, those other types of neobanks can maybe learn from Nubank's approach, how they've approached sort of solving some of those problems? What do you think has really set them apart?
Well, I think, one of the things that that American neobanks can look at is how they approach their population that they serve. One of the biggest things that I've seen in the neobank market here is how neobanks form around communities that are, for whatever reason, underbanked or unbanked. They're not able to access traditional financial services, being in a rural location or maybe being justice involved. So I think that one of the things that our neobanks could do is really focus on what's doing well abroad and how can we bring that to the United States with respect to the culture difference. One of the things that I think about is, will we ever have a global neobank? Will we ever have, a bank that is able to expand around the entire world and have, people from different populations, actively using their accounts? And I think, just getting through that cultural differences and understanding cultural competencies and understanding, what makes things work in each market will really be beneficial to ensure that something like that happens in the future.
It's just such a critical point, and it's that approach to solving for those problems in those communities that your customers are going to face, starting with the customers, staying with the customers. Bruno, from your experience, how important has the sort of the education aspect been in terms of like bridging that gap, extending those financial services out to those excluded communities? And I guess sort of like just delivering a little bit more in terms of like financial literacy and helping those people, because they didn't all have access to formal financial services before Nubank came along, right?
Sure. And I think that financial education is a long neglected topic in the region. I think even globally, but in Latin America, I think it was a pain. And some players that start operating with financial education in mind changed the game. Here in Brazil, we got a brokerage house called XP Investments that they grew by educating people about the stock market. So we saw more and more people coming into the stock market. In the case of Nubank, they had since the beginning, a personal financial management tool inside of the app, helping people really, manage their finance. So that's crucial. And I think that they're also investing that with new features. For example, they have you can make some specific investments, like purpose-driven investments inside the app. There are lots of new interesting things that they can do, and they are bringing, since the inception of the company, trying to be straightforward and clear in terms of the messaging, because that's another problem that we saw with the big banks. And they set a new type of standard for the market. So not only in terms of UX, but also financial education. And there are lots of other things that can be done. And I believe that the Nubank's a very good shape to do that and continuing, changing the market, not only in Brazil, but that applying also to Mexico, Colombia, and some other countries that they are into right now.
Can I just build on that in the sense of bringing the comparison in again? I think there's also a cultural difference about how customers are willing to interact with a financial institution trying to educate them. So I think a lot of companies in the West, banks, neobanks, have tried blog posts and videos and educational tools, and they get very low levels of interaction. And I believe that's partly, there's a few reasons, but I think the two major reasons are, one, that people think they know. There's three. People already think they know. They don't trust a financial institution to be acting in their interests, whereas Nubank has established this position of trust in Brazil. And then the third thing is having the capacity to absorb that information. Like, you have to genuinely want to go and absorb it and learn it. It's very hard to be educated if you're not receptive to it. And I get the feeling that different cultures are more open to engaging willingly and spending time to be educated. That sounds incredibly patronizing. That wasn't what I meant. But to absorb the information that people are trying to impart because they know it will help them and they want to improve themselves. So I think, when we look at a lot of the programs that have been launched by financial services companies and fintechs across Europe, they just get so little engagement that there's definitely a difference in the way it's been delivered and the people.
Yeah, and we see that, don't we, in the numbers, right? Nublog, where Nubank posts its personal financial advice, received, I think, 7.5 million visits last month alone, right? So it just serves to sort of illustrate your point, Sarah. Bruno, last word to you on this.
Yeah, I think that the two basic elements here, even prior to blog posting and all of that, it comes down to transparency in the way you communicate with your clients and UX as well. So I think that many of the hidden letters that the other players used to apply in the market, so not a very clear communication, that left a gap, in terms of the communication with the client. So the way Nubank changed that by being transparent in the way they communicate and making a usability so that people can actually understand what's going on is better than trying to told someone how to do something. And out of this, they created their content and all of that so that the ones that want to go into the journey of learning more about that could do so. So that's another important point, I think.
Yeah, agree. I think that's important. It's not just doing the right things, it's doing the right things in the right order, building that credibility, building that relationship, and then sort of building on it from there. And I think also maybe we're all just suckers for purple cards or hot coral or whatever flavor you're having today. All right, cool. I am going to just take us to a quick break. We'll be back with you very shortly.
Here at 11FS, we believe in explaining FS without the BS. That's why we created our 11FS Explores series, weekly videos that break down a complicated financial services topic into something everyone can get their head around, such as
on-ramping,
buy now, pay later, the cost of living,
ESG, stablecoins, telematics insurance,
and inclusive design. Search 11FS Explores on YouTube now.
Okay, welcome back. Let's get into our next story, which comes from CNBC with a headline, Inflation peaked, but it's not returning to pre-COVID levels in 2023. That's according to Mastercard. So inflation has already peaked, but it will remain above pre-COVID levels in 2023. This is according to David Mann, the chief economist for Asia Pacific, Middle East and Africa at the Mastercard Economics Institute. So inflation has seen its peak this year, but it will still be above what we had been used to pre-pandemic next year, is what Mann told CNBC's Squawk Box Asia. Central banks around the world have been hiking interest rates as recently as November in response to high inflation. They include central banks from the group of 10 countries, such as the US Federal Reserve, the Bank of England, and the Reserve Bank of Australia, as well as those of emerging markets such as Indonesia, Thailand, Malaysia, and the Philippines. So, I mean, pretty clear statement here from Mastercard. Maybe Janay, will come to you first on this one. What was your reaction to this story? What were your thoughts when you read it?
Well, I think that, everybody is reacting to higher interest rates right now, not just the fintech industry. I think the number one driver of the reaction to inflation are consumers, and looking at their activity, just thinking about, their retail spending this past month was not on par with what was projected for the month of November. So looking at how they're reacting is indicative of how big banks and fintech companies alike will be looking at in the future. Pretty much the whole fintech industry was created during a period of low interest rates. So your savings at one institution versus another wasn't necessarily about interest. It was more about your differences in consumer experience. But, as the interest rates rise, industry possibly could be unsure of what the impact on customer deposits will be. If neobanks begin to lose deposits to higher interest savings accounts, they're going to start having to think strategically about how financially they can offer better interest rates and maintain balance sheets. And also looking at how digital lenders will see their cost of funding rise, which means that they'll have to hike prices, which traditional banks usually don't have as much pressure to do.
Yeah, it's such an interesting point about fintechs having to think about really, what's the hook? How do they sort of pull people in from an interest rate perspective? Sarah, in the UK, we're seeing like Crew, they've recently launched a sort of what they're calling a no strings, I'm doing air quotes, 2% interest rate current account, which is great as a hook. But how much do you think that's going to resonate with customers versus sort of like features and things that they're probably going to need going forward to give them better control over their personal finances and spending, etc.?
Yeah, it's going to be interesting. I mean, there's always been a segment of the market which is very interest rate sort of savvy. We have this chap in the UK called Martin Lewis, who is known for doing these. He's like a money guru, and he appears on morning television and has a website and everything. And he always publishes, the top interest rate accounts and which ones you should use. And anybody who is sort of always been aware of their finances already knows where the best interest rates are to be found. I think the problem is, it doesn't matter how high the interest rate is if you've got nothing to save. I think the bigger problem here is that people haven't got any money to spend, let alone save. They can't afford, we're joking, we're sitting here and I'm genuinely wearing 5 jumpers, but my heating is on in my house. I can afford to put the heating on. There are plenty of people out there who don't have the money to put the heating on. And where I am right now, it's minus 12 Celsius. So that is cold. What's the point in offering an interest rate? As I said, if somebody's got nothing to save, we need to find better ways to help people manage the cost of living crisis. Now, I don't think that should be entirely on financial services. I don't think they can solve it. It's a much, much bigger problem. In the UK, we have inflation, as we do in the rest of as the rest of the world does. We also have, ongoing Brexit problems. We have political instability here. So those things are all going to continue to impact the cost of living. We've got people striking. The nurses in the UK are striking today. They have never been on strike before in the history. So it is huge. And so what now I've got on another soapbox. Get back off the soapbox, Sarah. Answer the question. I think I think interest rates are not the answer. I think products and services that help people manage their money better are the answer. Some examples of that would be helping people manage debt they've already got. How can you repackage your loans and make sure that you're paying off the most appropriate part of that loan you've already got? How can you, if you need access to extra funding, access the most appropriate funding for you? No brainer, a 30% credit card, a 30% interest rate on a credit card, probably not the answer to most people in debt. So how do we help people access appropriate credit for their situation? And how do we help people find the lowest prices for the things they need? So whether that's insurance or utilities or even their groceries, how do we help people make the most of what money they've got? Those are the tools that I think can have some impact. They will not solve the problem. And I think it's optimistic to be looking at 2023 and going, inflation's peaked, it'll come back down again. It's the way people are living and the way people are struggling is going to carry on for a long, long time.
Yeah. And look, I saw some really startling statistics on like the growth of food banks in the UK and stuff over the last sort of decade or so. Really, it's terrifying. And I think, credit balances, short-term credit card balances are through the roof. Defaults are already sort of rising at record levels. It feels like there's really very little resilience at an individual level, certainly in the UK economy, but I think, the US and other economies as well. Bruno, what's the sort of LATAM lens on this? What's the picture there?
Well, looking a more broad way, I think that's part of the Latin American package here, because we've been through scenarios of high inflation, for different times in history. That's kind of the standard. And I think when you look at, of course, things are going to be harder, especially when you look how things used to be prior to the hike in interest rates and inflation. We've been, for example, in Brazil, we had like a 2% interest rate in August to 2020, and now it's like almost 14%. So we are used to, especially the entrepreneurs locally, are used to these changes. Of course, we're coming from a very different scenario, especially for lenders. Here it will be tough, but that's it. That it is what it is. I think Latin America have been used to that, not only Brazil but other countries, and I think that even though words like recession is something that terrifies Americans, that's not something that's a new thing for Latin Americans in the sense. So, but anyways, it's going to be a hard year following what we saw in 22.
Right, it feels like we've sort of lurched from one crisis to another crisis. I think, Bruno, just staying with you because I'm curious, does that make founders in Latin America? Does it make them more resilient? Are they more used to these sort of uncertain economic conditions?
Yeah, I believe, and more prudent as well with everything. Even I think when we lost a little bit that the previous years, some of the founders were not being that careful with funding that they received, and that's natural because it was a very optimistic scenario that everyone was feeling. But right now, not only the founders, but they are very resilient because of that. Some of them forgot that we can always come back to a bad situation, just like we're getting into again. But the more experienced ones I think they are doing the right thing and trying to manage all of that, the chaotic scenario that we're going to face ahead. But anyway, nothing new. But for the experienced ones, for the new ones, some of them are just facing that right now.
Yeah, and then, look, Janay, that's, I guess, the sort of founder picture, but I guess one of the most sort of startling impacts that we've seen of this situation is the sort of the large-scale layoffs that we've seen in sort of fintech, tech more broadly. Is that a trend that you expect to sort of continue into 2023?
Yes, I absolutely see that as a trend that will continue into 2023. And I even see a kind of a layoff for content creators as well, who depend on these technology firms and financial services firms to, as means to supplement their income or substitute their income entirely. I know that there has been reports of a looming recession when it comes to content creators. I know that there are some advertisers that, will start limiting the amount of monies that they do give to influencers to create content for them. And, I think it'll trigger a ripple effect. The layoffs that we're seeing now will, spur a lot of people to turn to gig work or, to just being unemployed, maybe going back to school. I know enrollment rates right now in the US are low because, people are looking at alternatives to school. There are companies that, maybe a few years ago did not require a degree, for people to work because they said that, they needed people in those jobs right now. So we'll definitely see a shift when it comes to, the future and this looming recession. And I think the people who will be mostly impacted the hardest are Gen Z because they have not really seen and experienced a recession before. And coming off of a shock from the pandemic, it's not going to be very pretty.
Yeah, no, it's such a good point, and I think nobody's immune. You guys are setting me up for these stories. It's wild because our next story is about creators and the creator economy. So I'm going to move us on. It comes from TechCrunch with a headline: Ocho wants to rethink and rebrand personal finance for business owners. So newly launched, Ocho wants to make it easier for business owners to set up and manage their own 401k retirement accounts. Ocho is joining the several fintech companies aiming to modernize and rebrand the retirement account away from traditional providers like Charles Schwab or Fidelity, or expensive solutions like lawyers and consultants. Ocho is leaning into founder Ankur Nagpal's background of working with creators when he was building Teachable. Teachable helped creators build revenue streams, and Ocho wants to help those same creators take their earnings and invest, harvest, and scale them in a smart way. So Ocho is charging a flat $199 annual fee to help individuals start their retirement account. It takes about 10 minutes to set up and 48 hours to get final confirmation. So Janay, I'm going to come back to you on this one. Maybe you wouldn't mind giving our listeners just a quick explainer on 401ks, just for those that aren't sort of familiar.
Absolutely. So a 401k is an employer-sponsored savings account that offers a lot of tax benefits for an employee. With the 401k, an employee will set a percentage of their income to be taken out automatically from their paycheck before they're taxed by the federal and state governments. Sometimes that contribution is matched by the employer up to a certain percent. So people who participate in the 401k plan, they can choose how to allocate their funds amongst different investment options like ETFs and mutual funds, stocks, bonds. I know next year the annual limit for employee contributions will be $22,500, which is why 401k is an attractive way of saving your money because if you use a Roth IRA or something, any other alternative investment retirement vehicle, you don't have that much funding. You have more funding restrictions with those investment vehicles than the 401k.
That's a really helpful summary. And so I guess the next question, Janay, sticking with you, is an obvious one. So I think there's an estimated 35% of private sector employees that don't currently have access to 401ks through their companies. What are some of the issues, I guess, with 401ks as they stand right now?
Well, I think the challenge with 401ks is the fees are very high, depending on how much you pay towards your contributions every paycheck. The 401k company the company that's holding your 401k account is taking a piece of that, your gains or service fees. They're charging those things to you. So I would say that's one of the biggest things that I've seen in this space. And also looking at the people that don't have access. So if you're you're using a 401k, it's mostly offered by traditional companies, corporates, but looking at gig workers, looking at people who even work in the nonprofit space, public servants that aren't members of the government, you're not offered those same opportunities as somebody working at a corporation. So that's also another thing, the accessibility, it can be very limited. I also think about the investor, the person who's contributing to the 401k plan, they assume all of the risk that comes with managing that portfolio, their retirement portfolio. So if they don't have the proper financial education, they could be choosing investments that aren't necessarily compatible with their financial goals when they retire. So looking at those three things, those are some of the biggest challenges with 401ks as they stand now. I know there's also another challenge with, people who are looking at, being able to use their 401k funding to invest in cryptocurrency. I know that Fidelity has been offering that product for some time now, and there's a little bit of back and forth between lawmakers who do not feel that Fidelity should be offering investments into crypto assets. But then you have consumers who are very interested in that. It increases financial accessibility for people who traditionally would not, use crypto native products to invest in crypto assets. So I would say those are the four big challenges with 401ks as they stand.
Yeah, it's a complex landscape, isn't it? Sarah, what do you think about sort of Ocho and maybe the role that they can play in solving for some of the challenges that Janay's just set out?
Well, I have to say I'm in no way an expert in 401ks. What I can comment on is the huge gap that there is in an awful lot of the world between how much people are putting away and how much they're going to need to live on when they want to retire. And so anything that helps people, A, understand that this is something they should be doing, and B, understand how much they should be putting away, and then C, helping them to do so if that's through a matching program or whatever, I'm all for. I think if the product is tailored to a specific industry or specific niche, it's going to make it easier to get that kind of word of mouth customer acquisition going. People who are self-employed, we all share accountants, for example. We all say, this is a great accountant, you should use that person, you should use that person. Because self-employed people don't obviously have pensions, employer-provided pensions in the UK in the same way as they don't in the US, it's the same. This is the best SIP provider, this is the best pension provider. So if you serve one specific area well, I think that's gonna really help you, because you understand the nuances of that industry, how those people work, how much it's realistic for them to be able to put away. So I think, if it can do those things well, then it sounds like it's marked for success to me. But I would just go back to the point I've made before. Right now is not a good time to be asking people to put money away for something that might happen in 40 years' time. And the best way you're going to get them to do that is by saying, you put $5, I'll put 10, whatever it is. With the caveat, unless you're Robin Hood, in which case I think you should back out of the retirement space. I'm not on board with their recent pivot from anything goes to, plan for your future. But that's another story.
No, absolutely. And actually that point about the sort of financial education, giving people those right tools that they need to not only build sort of good financial habits now, but in a sort of sustainable way, actually build towards their future. I guess, Bruno, like going back to what we talked about with Nubank, it feels like maybe fintechs are sort of uniquely positioned here to connect with those consumers in a credible way and actually work with them to sort of achieve that, right?
Sure. And I think that when you look at the pensions industry, all of that, it's poised for reinvention. I think that if there are players that can really try to reinvent how things are done in this industry are some of the fintechs in the field. So and again, I think it's important talking about the whole education thing, and that's a pretty huge gap here in Latin America. And some of the players that already gone into this direction, like XP Investment. I just told you guys, brokerage house, that Brazil got a low usage of low percentage of people on the stock markets, and XP Investment changed the game in an offline era, which basically they did that in different parts of Brazil. Many lectures around what is It's the stock market, something that no other bank or other brokerage house did before. Now we're much better equipped in terms of what we can use in terms of digital, doing that digitally. And some players are already doing good things in the sense. And Nubank is one of those players. The way they're trying to change the possibilities for investors and how they perceive and how they really manage and understand market. So that's important. And fintechs are doing something around about that right now.
I just wanted to quickly add off of what Bruno is saying, financial education is very important. And I think that with the rise of more mobile banking, neobanks that are app only, there needs to be an emphasis on digital literacy as well. And a lot of people don't connect the two. They don't put them hand in hand. So if we're thinking about how can we make, the fintech industry be a more inclusive environment, we should also think about, what kind of education can we provide for people that don't use the internet right now, or for whatever reason don't have access to the internet. We can't talk about, accessing underbanked people and unbanked people without, looking at, are these people able to use a phone? Are they able to go onto a computer? Do they have reliable internet to be able to use those things? Do they have broadband? So there are a lot of things that go into the digital literacy piece, and I feel like that is a foundation that you need to set if you're going to also introduce financial education on the internet or on an app or with any other vehicle that is used through a phone.
Absolutely, because financial inclusion or just inclusion generally isn't just extending it to the people that you can reach, right, or that are easy to reach. It's extending it to everybody, and I think that's such a good reminder. Okay, great. So I am now going to move us on to our next section called Big Click Energy, a quick fire roundup of some more click-worthy news stories this week. So first one comes from BBC News with the headline, UK banking rules in biggest shake-up in more than 30 years. So the government has announced what it describes as one of the biggest overhauls of financial regulation for more than 3 decades. It says the package of more than 30 reforms will cut red tape and turbocharge growth. Rules that forced banks to legally separate retail banking from riskier investment operations will be reviewed. Those were introduced after the 2008 financial crisis when some banks faced collapse. The package of changes, the Edinburgh reforms, is being presented as an example of post-Brexit freedom to tailor regulation specifically to the needs and strengths of the UK economy. However, critics say it risks forgetting the lessons of the financial crisis. I think my thought on that is, yes, it does. I think when you go back to some of the things that we talked about in the FTX and SBF story, I think sadly memories are short and we just don't really seem to learn the lessons of the sort of disasters that we go through. So, we'll wait and see how this one plays out. But as far as I'm concerned, it's certainly not universally good news. Okay, let's bring everybody back for the final section of the show. And to mark this festive episode of Fintech Insider, we're asking our panel to put something on the naughty or nice list of financial services. This is the point in the show when I get really pleased that I'm actually hosting and not on the panel. This can be an individual, a company, an industry term, and we need just one for each list. So who should get a bumper stocking this year? And who deserves a big lump of coal? So Sarah, I'm going to start with you, if you don't mind.
So I'm probably going to pronounce this wrong. The coal in my mind goes to Giorgia Meloni, Prime Minister of Italy, who basically said that digital transactions are not real money. That's paraphrasing. And she wants everybody to go back to using cash. And I won't speculate as to why she might have suggested that, given, Italy's complicated political history. But honestly, when I heard that, I was like, read the room. You want help from Brussels, and that's what you're going to say? So that's the coal, and I have to do a present as well, right?
Yes, please.
So you gave us a list of suggestions, and this is giving away the secrets of how this works. But when I saw Serena Williams on there, I kind of wanted to go for Serena Williams because I think she's just done so much generally for everybody, but then was slightly aware that we were going back into celebrity investor territory and that could be dangerous. But I think she deserves an awful lot more praise than she gets for everything she's ever done. And when she does invest, and her sister invests as well, I know Venus Williams invests as well, when they do invest, they invest in products and services that support people like them from backgrounds they have come from, to help, to advance themselves and help themselves, take a step up in the world. So I think for all that she's sort of stepped back from tennis, she shouldn't step out of the limelight for all the other good work she's doing. And sorry if I've stolen anybody else's.
No, that was really good. Really, really good. Janay, let's go to you.
So I would say my number one person on the naughty list is Kevin O'Leary, who was a fierce defender of the FTX collapse, who he even went and testified and in support of SBF this past week on the Senate Banking Committee. But I feel like his overall demeanor about this collapse and overall demeanor about the crypto industry as a whole is leaving me with the desire to give him a big lump of coal. And for my nice list, the person I would give a present to, I would say, and this is very interesting because I don't agree with all of his politics, but Patrick McHenry, who is the ranking member of the House Financial Services Committee, he's really done a lot this past year to, move the needle on fintech regulation and crypto regulation in the House. And he is poised to he will be the next chair of the House Financial Services Committee. So I'm excited to see his agenda when it comes to, clearing up some of the regulatory gray area with fintech in the United States. So I would give him a present.
Nice. Yeah, two great shout outs as well, Janay. Bruno, what are your thoughts?
Well, the call will definitely go to Sam Bankman-Fried. It's just like, man, this guy is a sociopath. And it's crazy when you look at everything that happened, all the statements to the media before, the way that he displayed himself as a paladin of the industry, a messiah, and all of that statements just like, I believe some exchanges might be secretly suffering from liquidity problems. And come on, you're talking about yourself. So it's so crazy. So, and also the way, that he's acting like, it's not a big deal, and going to the media and some media giving him attention, which I think it's a really bad thing. And so it all became a big circles. And for me, the call would go to him, and the present to the president of the Central Bank of Brazil, Roberto Campos Neto. I think he's doing an extraordinary job here from everything since the beginning. I think there are lots of regulatory changes, regulatory sandboxes here implemented in Brazil. PIX, which is a huge phenomenon, piece of infrastructure here in payments, real-time payments in Brazil. And more recently, the CDBC, the Brazilian Central Bank Digital Currency, which is going to be released hopefully at the end of next year or so. And there are some tests already happening by the industry. So I think he deserves the prize, and he's doing an extraordinary job. And right now, he's going to chair also the Bank of International Settlements, if I'm not wrong. So I really wish that he can spread all those good practices all over the world.
Can I award one further lump of coal?
Oh, 100%. Go for it. We can keep going.
Can I give him more than one lump of coal? Can I give it to Elon Musk, please? Because I think he's possibly responsible for an awful lot of the cultural and societal issues that we have discussed in this podcast. That's it.
I was just thinking about him, so I'm glad that you said it, because I was thinking that too. Can we give a group lump?
Yeah. Let's give him 4 lumps of coal.
Yeah. No, I completely agree. Collectively, I'm very happy to give. I'm also being accosted by our producer Matt, saying that I do actually have to contribute. So I'm going to go very quickly. I'm going to do sort of 2 things that stood out for me this year. My nice list, my present. We did an insights show earlier this year on inclusive design, which I know we've touched on earlier in the show. And one that stood out for me was Sibstar, which is designing a fintech app for dementia sufferers and their families, solving a really difficult just sort of personal problems. So that was one that really stood out for me. So shout out to Sibstar and the guys over there. One thing that I'm going to give the lump of coal to that really it just at the time, I think it just gave me the creeps, and I think it just spoke to like a worrying trend, certainly that we're seeing here in the UK. But the idea of paying for sort of groceries and pizza delivery with sort of buy now, pay later. And I just think it speaks to such dangerous financial behavior, and sort of building those habits over time is just so destructive, right? So those are the two things that sort of jump to mind for me. We had some suggestions actually from our listeners too, sent to us on LinkedIn and Twitter. And Nicholas Labovitz says, Dan McCrum defo makes it onto the nice list after launching Money Men. Couldn't agree more. And of course, everyone involved in the Wirecard scandal goes right on the naughty list. So again, I think that's a good shout out in addition to those from our panel. Right, so that wraps up this week's news show and our last news show of 2022. So thank you to all our guests over that and everyone who has listened over the last 12 months. We can't wait to share big things with you in the new year too. And of course, thank you so much to today's guests. Let's go around the virtual room. Maybe you can tell us where people can find out a little bit more about you. Janay, let's start with you this time.
You can find me on Twitter at Janay EO, so first and last name. And then my organization's website is progresschamber.org.
Awesome. Sarah, let's come to you next.
You can find me on Twitter at Sarah Kocianski, or you can find me on LinkedIn there as well. And you can also apparently still find my blogs on the 11FS website. So that was a nice surprise this afternoon.
Well, lucky you. I think when it comes to like Christmas reading, downtime reading, that is a go-to. And Bruno, how about you?
Nice. Yeah. First of all, thanks for having me again here. You can find me at LinkedIn. I'm very active there. Bruno Diniz, D-I-N-I-Z. So if you put fintech after that, I think it's easier to find me. And also at my website, brunodiniz.com as well.
Awesome, Bruno. Thank you. And it's always our pleasure. And as for me, you can find me at Ross Gallagher 07 on Twitter. And listen, thank you for listening. Do join the conversation on social media. Email podcasts@11fs.com. And find our mailbag link in the show description to submit your questions for the panel. Thank you very much. Goodbye and Merry Christmas.